Hello and welcome. This is the first part of a video series, which will be regarding that of trading on the smaller exchanges and why I feel they are very profitable, and they have been very profitable for me so far in the year 2017. I will be mainly using reference to the exchange known as Coin Exchange. And of course, everything you do is within your own risk, own reward. I'm providing the information. And within this current video, let's talk about the different exchanges and the order books being very, very important. There are a limited amount of bids and asks, as well as buyers and sellers in market, making it easier to read. You have buyers, you have sellers, you have bidders, and you have askers. Those are four key components that is important to be familiar with on how all four function. And as a market maker, that means you're putting buy and sell orders for people to come to you. You are a bidder. That's if you're looking to buy. You are an asker when you're looking to sell. If you are a buyer, that means you are taking the asking price. And if you are a seller, you are taking the buying price. The bid-ask size differential, known as the bid-ask spread, can oftentimes be very wild, and it's a profitable situation that I'm going to be going over. Prices can go well over and under the current fair values, and that's often because of the above, with the large spreads that can often occur. Bidding wars, that is an important subject in this, especially if you want to have very good, very large profits. The better you are within it, the more profitable it's going to be for you. And these markets can be slow moving on rallies and sell-offs, and I'll explain in this video how you are able to profit on such. Checking for bidding mistakes, and when you see it, how you profit on it, and insane high and low bids. All right then, so let's take a look at a decent code, nothing of major cap in volume, but something known on the larger exchanges. That's the code GRS. And this is the bid and ask orders. So you have the buy orders, the bids, and the sell orders, which are the ask on the left-hand side. As of the making of this on December the 19th at sometime around 8 p.m. Eastern Time, the fair price was $66.87, and this is what the order book looked like. Therefore, there's already a major differential in the bid-ask spread. As you can see, there's 6,002 on the buys, and there is 8,499 on the sell. So if you're buying right now at that price, you can buy 257 or 2% of a Bitcoin, but you are also paying about 30% more than market price. So if you are an owner of this code, and somebody happens to buy from you, because you are we'll say hypothetically you own the 257 sale order for 8,499. Somebody buys off you, you got yourself a deal selling it for more than it was worth at the time. If you buy at 6,002, not as good of a deal for selling, still 10% plus on that situation for the 46 that are available for sale. When we look at the bid numbers and the other numbers as well, we can see 6,002 is available. Sorry about that. 6,001, 6,000, 58, 57.98, 57.96, 57.95, 94, 92, 89, 87. A lot of people in that area looking to bid. Is this a situation where there's a lot of bidders who are taking control of the market? Because it's always good to know who's in control, the buyers, the sellers, the bidders, or the askers. And you know more about who's in control amongst the bidders and askers when you know its history and you see a market. I'll explain more on future chapters within such when I explain markets in which I was obsessed with amongst the bid-ask orders earlier this year. And when you see a case like this, then oftentimes that can usually mean it's going to be very difficult to even consider putting buy orders in because you're just going to be jumped over. So the bidding war, therefore, is going to be difficult to win. And the better place to play in a situation like this would be on the sale. So if, say, for example, you are one of the people between 85 and somebody else at 84.99, then those two people would be could be in a bidding war against each other, where the person at 85 could then lower their bid to 84.98, and then below that another person come in, rechange that over, and you want to try to be the first person in line to get that sale. So that's why whoever's quickest to the punch, checking to see if people are outbidding them, checking multiple times per day, can have major advantages. Also, within a bidding war, let's assume you're at the 8,500 bid, and I've been in this situation many times before. You already know it's an amazing area to sell, but you really don't have time to keep on overbidding someone, especially because they're very good at it. If you put, say you underbid them by 1 Satoshi, so you're best in line, and then 10 minutes later, over and over again, they're always going one better than you. They're pretty good at the game. So to make a statement, what I might do in situations like this, assuming I only own the 204 for this example, or that's all I want to sell in this area, then I would maybe sell 30 or 20 at about 7,500, sell maybe another 40 at about 8,000, maybe another 60 at 8,250, and then the remainder at about 8,400 and change. That makes a statement, and then I'll see what that person wants to do, especially if I have to go in town, do some stuff, or I'm just not wanting to check the computer. That's a situation for what you might have in store for that. If you're arbitraging, this is not arbitrage, I'll talk about that later on. But if you're just buying low, selling high within these, it gives you better opportunities to get good buys and sales. Because, for example, let's assume that you put a buy order in for the 6,000 area and you hit. Well, now you can put your sell orders in at these normal levels. But if you have one in at 8,400, there's a decent chance that can get filled, where maybe Bittrex site might only get up to 75. You also want to consider some of the lower bids as well in these situations in here, because the bidders are in control. Just within this page, only two bids on the lower end, which state 5,107 and 5,106, are really that significantly different from the other ones. So when you're trying to get even cheaper prices, 5,200, I'll talk more about the insane orders at the end of this episode. But you can decide in here when you look at the numbers where you might want to put buy orders. You can see it easily on the sells, where we got 8,500, and then we got to go down to like 10 or higher to 10,000. We got 12,000, then 13, 14. So we can see the increments in size. So there's definitely nothing wrong with putting these like multiple numbers in. Sometimes what I would do is I would try to maybe sell a little bit at the 84.98, maybe sell some at about 14,800, and then later on 25,000, 40,000, and so on and so forth. So this works for many different codes like GRS. There's ones like Faircoin, Komodo. There's a lot of different coins with decent cap size that are on here. Let's move on to a bigger cap size, which would be Litecoin. And this is the 60-minute time frame. Now within codes like Litecoin, Ethereum Classic, Dash, all the majors, they trade a little bit differently. But the key things worth noting is, I mean, look at these moves that happen. You can't expect this to happen all the time, but you've had one amazing one and two pretty good ones that have followed. So therefore, if you're playing the strategy that I talk about, where you just have all your sell orders in, all your buy orders in, congratulations in filling your sell orders in when this thing popped all the way up to this upper end. That's like a fantastic situation. For you can immediately buy everything that you sold back. That's just tremendous. And then you can just put your sell orders back in as you were before, take the profits, and how you do. And here's a couple situations where the market twice comes down to like 0.0065 area. I had the same thing happen to me twice over. I bought at 0.075 and then I sold it back at around the 10 handle or the 100 handle. And then again, it happened again, and again I sold at the 100. And I got a buy order again at 75 in case it goes back again. So you get more likely situations in which that you can have these things occur. Now, usually these markets will have the big swings up when the main markets are pumping. So when Bittrex and Poloniex and Bitfinance and all the bigger ones are having 12, 15, 20, 25% moves over a 30-minute period, that's when this happens. Same thing on the downside. This was a situation when the price went from, I bought it at 75. That's when the price went down to like 90 or 89 or something. Nowhere near the 75. But because on the short term it was in a downtrend, that's why people were pulling the sell buttons, interestingly enough. So you get more opportunities to be able to get trades in. And if you're just looking to put your buy and sell orders in normally, like you would on all the bigger sites, if you have a sell order in, say, hypothetically for the 0.0125, and the price action, you wake up and you see it's like 137 on Bittrex, 129, 132. It's a guarantee someone's taking it. It's guaranteed. Because the market has to move within the normal price, because you're going to have situations where you could just transfer funds easy enough. So it's a formality that has to exist. But why people buy it up and sell it down like this so much, I don't know. But take advantage of it by having your buy and sell orders. Furthermore, with codes like this and Dash and all the others, when they are pumping up, they can oftentimes have the moves like you see, but they can also be delayed. Let's assume that we have the price right now at the 975 handle, but things start to roll. Now and the bid-ask ratio here, I'm not going to show it, but it's okay. You can have a 1-2% difference, 3% difference at times, but it's usually pretty decent. Nothing like you get on the bigger exchanges, of course. But let's assume that you have 975 bid, 995 ask. And the thing's just starting to shoot up on Bittrex. It's now at 103, 104. You're going to start, now there's going to be a run to get those buys in. You might have 20 seconds, 30 seconds, and maybe even a minute, 2 or 3 to get some okay deals. But when I was accumulating Litecoin over the last few weeks, that's exactly how I got a lot of them. I was getting 3%, 4%, 5% deals, cheaper prices on the short-term breakouts. So if the price was, say, say a 78 handle on Bittrex, I was buying this up at 75 on this site. That's the type of stuff that I was doing, and those are the things you can look for. Same thing on the way down. If the price is falling, say it goes to 925, 915, if you got Litecoin here, you can sell it off maybe at 975, 96, 95, and sell it off for about 2-3% more than it's going for at the live point. And this is the same case with all the other majors like this, like Ethereum, Dash, the Classic, ZEC, all the bigger ones work this way. And now let's finish this off with the coins known as the SHIT coins. The not so good ones. The ones that are extremely speculative. And, well, we have a situation with buy order at 779 Satoshi, 778, 777, 77. Look at the buy. There's the bid wars is in play. I have never bought in this before. I never even heard about this until I was just trying to find a code with a ratio like this. I only looked at about 4 or 5 ones I never heard of until I seen this. And there's a lot of them like this. But the bid-ask ratio is out of hand. So the simple play is just trying to buy it low in the 700, 780, whatever you can get in. And then if you can move it over, just try to sell around 2,800. Even if you end up buying it, say if you got the buy at 779, whichever, then you put your sellers in at 2870. Even if you just keep on playing around, you might be happy to sell at 1500 and all that stuff too. You're going to notice that these things probably barely move. You're also going to notice that a lot of these get taken out in lots where someone might sell it down to 404 all at once or to 200 all at once. They'll buy it up to like past that 59.90. You're going to get a lot of these weird things that can happen within these markets. These are also the ones we can go for the major, large, speculative, large. Like we already get decent gains buying 780 and selling at 2,700. But you can speculate about buying at 300. Maybe put a buy order in below the 143. A buy order in at 500. One strategy is when you see, okay, if someone wants to sell it down, what I want to do is I want to calculate if they're going to sell it big, where would be a good bottom spot? If I put in a sell or a buy order at around maybe 350 or 300, then I might get that filled, which is a strategic place for putting an insane buy order. And then with the sell orders, put in like 40,000, 80,000. Why not? I mean, the reason why not is because you want to make sure you sell them at good prices that would actually go, like 5,000 or 10,000. But you get a lot of big opportunities within these types of codes where you're able to get some tremendous gains on the play. But of course, they're always got the risky situation. But I can just remember a code like DEM. D-Mark or something like that. It was just one that I found, I bought, I got in, and I sold good. And there's like 4 or 5 or 6 of them on here I just speculated around with and did pretty good on a few of them actually. And some of them not so good because there's going to be situations where the coin will maybe go to nothing. You might see on your screen someday that you used to have a Bitcoin value of not so much, but something. Then all of a sudden it says it's worth nothing. It's not on an exchange. Or you don't see it anywhere. You don't see it held for orders. And now all you can do is withdraw them or trash them. And that can happen with these codes because there are hundreds to over 1,000. There's 1,000 of these codes that are low cap that are just nonsense. But even a lot of these nonsense codes, you can get in, speculate, make a trade. Like even, for example, on the mathematics on such, let's assume you buy 200 at the 800 handle. If you sell at 2,500, now you can buy back for guaranteed profits the rest of the way. That's how large the numbers work. Also, when you look at the amount of Bitcoin within these orders, this is pretty slim to say the least. I would be a major whale in this market if I wanted to participate, and I'm not. A lot of people watching could be a whale in this market because it doesn't take much. It doesn't take much to move it. So these are the things you want to look at. If you ever see big numbers on here where there's big blocks, buy and sell orders, one strategy is, let's assume that someone comes in and puts a buy order in at the 500 mark and buys 0.2 Bitcoin worth. That would be a big buy block for this market. In this situation, a lot of people might want to try to buy barely above a big buy order. And now let's assume someone comes in here and puts a sell order in for 4,500 and wants to sell over 1,000 of them. 0.2 again, a big sell order for what this would be, or whatever 0.2 would be worth. Well, now you're going to have people that are going to be trying to put sell orders barely underneath it, just even 1 Satoshi underneath it, so that if anyone's going to take that order, they have to go through them to get through that particular person. And there's a decent chance that they're just going to fill that order and that's it, or they're just going to take a partial amount of that order, and it's just a better strategy to be barely before them than away from that player. Okay, that will conclude the first part of this video. So as far as the rest of the way, I'm trying to put this in a good order so that it makes sense for what you need to learn for each segment. The next one will probably be calculating volatility probability. Then I'll move to the art of the arbitrage. Then move on to the coin market cap tool. Time management and plan and effective repetition plan will pretty much be the same video. And then the chart's not needed. I'll go over that at like whatever point, but that will be the next little bit. I'll be talking about volatility, probability, going through, it'll be more of a mathematical based video. Thank you for tuning in and have yourself a great day. Bye-bye.